So our view on that is that for 80% of the region, inflation will come down within central bank's comfort zone by third quarter of this year. And that will mean that central banks will begin to take up rate cuts from the fourth quarter of this year, i.e., quarter ending December 2023. We expect Bank Indonesia to be the first central bank to go ahead in October this year with a 25 basis points of rate cut. And for RBI, we think they will be able to take up rate cuts in first quarter of next year.
Chetan, though clarifications on that pause or a pivot kind of have come from our own governor as well as US Fed, and you did speak about the year end. What could be the trajectory of rate cuts going into the next year? How many cuts are we talking about from the US Fed as well as from our own governor next year?
From the US, we're expecting 4 25 basis point rate cuts. So expecting about 100 basis points of rate cuts in 2024. For the RBI, we're expecting just about 2. And that's because growth will be still relatively strong, and the central bank would want to have opportunistic disinflation, taking inflation closer to that 4% target that they have. So it would be, in our view, not fair to expect more than 50 basis points of rate cuts for the Reserve Bank of India.
Chetan, one end of the overall economy, which is manufacturing, appears to be firing on many cylinders. Global manufacturing PMI appears to be in a contracting mode, whereas India PMI, manufacturing PMI, is actually expanding. How do you see the velocity of this continuing for the next few years, the way public sector has been leading the manufacturing push so far, but early signs of private sector also joining in, coming in now?
Well, I think the driver to India's PMI being so strong is that strength in domestic demand that I was mentioning earlier. And we're expecting that to continue. So we have support for the manufacturing sector from demand perspective, from pickup in goods consumption. And at the same time, we are seeing that there has been pickup in the investment activity. So both consumption and investment goods demand is helping manufacturing sector to show that acceleration, and that is likely to continue in India going forward as well. So yeah, we would be confident that manufacturing sector PMIs will hold up in India and will continue to outperform rest of the world, because for US and Europe, we are expecting that this inflation rise that we have seen will mean that they will pay the price of that high inflation in form of higher interest rates, constraining their domestic demand. And in fact, US and Europe GDP growth is expected to slow down in the next 2 quarters, which will mean that India's manufacturing sector will continue to outperform US and Europe.